Welcome to Limit Up, the weekly capital market podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years and a partner at Findex, a leading financial advisory and accounting services firm based in Australia and New Zealand. I'm here today with Ian Reynolds, trader and investor, former bank foreign exchange market maker, early investor in Bitcoin and tech founder. Welcome, Ian.
Hi, Don.
How's things with you today?
Yeah, a bit cold. Must be 0 or something here in London.
Yeah, a bit different to us in Brisbane, but we'll soldier on.
Indeed.
So, making money in stressed capital markets situations is tough. A typical investment portfolio will often fail. The world is moving into really challenging times as the US tries to address $39 trillion in debt, contradictory fiscal and monetary policy, internal conflict, and numerous wars. And the rest of the world starts to consider a new global reserve currency, a multipolar war, and aging demographics. So how can we understand what's going on in geopolitics and macroeconomics? I have today Ian from Siberia Capital with his latest press release. Ian, tell us what's going on.
Well, as you can imagine, with two wars going on and a US president that wants to mix it up, there's lots going on. Whether this makes any difference is, of course, a different matter.
Yep.
But certainly at the moment, and for this week's press release, the biggest thing I've noticed is that Hank Paulson, the US Treasury Secretary from the GFC, reappeared from nowhere after 15 years. And his message wasn't good. He basically, this was on Bloomberg TV, so a trusted source.
Yep.
And his timing is impeccable because he came out and said the US needs a plan to deal with their debt if nobody wants to buy it. Clear and simple. Right. They need to have a plan ready to go. They don't have a Fed chair currently that's willing to go along with that, but he may be leaving on the 15th of May. That's when his role is due. But I believe the FOMC has to vote that change in, and the Congress rather has to approve the new guy's entrance. So there's a lot of things going on in the next month, which may derail any such plan.
So let's just come back and sort of dissect a few things you've said there. So after 15 years, Hank Paulson reappears. Do you think he's just done it because there's a reason? He just happens to be the right person? Why now?
I can only presume something bad's going to happen.
Right. Okay. And he's the bearer of bad news. Is that where he comes from?
He's the guy that negotiated how things got settled in 2009. He's the guy that put together a deal with Barclays in the UK to bail out Lehman Brothers. But the UK government said no, so Lehman Brothers had to collapse. So he's been at the forefront of these crises. He's kind of the guy that if there's a war between the current administration, i.e. the Treasury and the Fed, then you need someone else to come and push them into the right direction. Clearly, it's so important that Trump can't do that, i.e. can't try and do that, which would be catastrophic, obviously. But at least someone somewhere has recognised that you need the old warhorse to come in and try and get some sort of action going.
Right. So he's come forward with the message, but he's basically been asked to, or he is putting his hand up.
Well, I don't know the answer to that, but he's there unexpectedly.
Exactly, and the unexpected says to me there's a message somewhere that this needs, as you said, someone else to come along and fix the problem up. Other than the GFC, has this happened any other time?
What specifically?
Well, this sort of potential collapse in demand for treasuries. I'm just sort of reading the Bloomberg message as such.
Well, let's say 1971, where the US was so in debt it couldn't redeem more than 40% of its dollars for gold, and France sent in the warship to get theirs. It's one time where Nixon was able to take the country off the gold standard, wreck the policy of Bretton Woods, and create the fiat currency system it is. But we're that much further down the line in what you can do, and you would have to recreate a gold standard or a similar standard to stop any massive outflows, I would suggest.
Okay. In your release, you talk about a bigger plan is formulated for a global financial reset. That's pretty ominous sounding words. And you talk about debt must somehow be allowed to grow. So debt has to get bigger before this bigger plan is formulated. That sounds a little odd that you'd want the debt to grow before that. And what does that do to the markets when they hear messages like that?
Well, it should reassure them. Whether it does or not is a different matter. But point is, we can't, the US, I think is it $9 trillion for this financial year, of which we're obviously a few months in, but it's got to roll over a staggering amount of debt, and at some stage buyers will run out. So we have to keep those buyers buying until another plan is enacted to change everything, the way things work.
Right. And so the plan will be the plan of Kevin Warsh's, is that correct?
Well, it'll be a plan that Treasury puts together, but the Fed has to enact, I would suggest.
Right.
The Fed being the government's bank.
Yep. What happens if Kevin doesn't get in, like he doesn't get through the nomination process? What happens then?
Well, he has been nominated by the president. That's got to be endorsed by Congress. And in theory, the FOMC meeting has got to endorse Powell out and him in. If it doesn't happen, we'll have Comrade Powell still. The markets still like that,
right?
Comrade Powell, but the administration absolutely hates that.
Okay.
So,
meaning,
and we're all staring down $39 trillion in debt. And how do you keep refinancing it and refinancing it and refinancing it?
Given Kevin is Trump's nomination, that obviously would not be sitting well with him if he doesn't get in straight away.
Well, no, absolutely not, because Powell and the Federal Open Market Committee haven't cut rates that they need to cut the interest bill, and they haven't done it because obviously when you do that with no other purpose than to save yourself some money, people don't buy your debt. Trump doesn't realize that, or maybe he does realize that, but you either got to go in with a really aggressive plan to turn things around, which the current FOMC don't have, and a real action plan for the Fed to buy the debt of America to the extent that it owns it all, I would suggest. Or you don't. And sitting in the middle on the fence only works for a certain amount of time.
Sure. You talk about buying the debt. Is it the full amount of the debt, or is just an amount that you get to that enables the economy to work much better?
Well, those two things are contradictory, because the more debt that the government owns, the less efficient the economy is, i.e. the less, a dollar in debt only produces 10 cents of GDP or whatever the numbers are. I'm just making it up. So like Japan, she's been in a depression, let's say, for 40 years until fairly recently. The debt gets so overwhelming that all the capital gets sucked into it and it gets devalued. Your currency gets devalued. So, we want less debt, more private sector investment. When everyone's told to buy the debt, maybe through yield curve control to keep the rates down, then nobody wins, but it stopped things going abjectly bad immediately. but no one wins for a long, long
Sure.
time. So
Yep. Okay. All detail to come forward in the big plan once Kevin comes in, or is it Hank Paulson coming in as well?
he won't be coming in, that's for sure.
No.
He's just the guy, the old warhorse, trying to bring the Treasury and the Fed together to actually have a plan to deal with this if it goes wrong.
Yep. The other thing I noted in your release was about the EU and the EU finally getting rid of Orban, who's the former Hungarian president.
Yep.
What has that meant to Europe and their economy?
Well, it's more politically because he was stopping the process of alienating Russia, if that's the right terminology. So he was a friend of Russia, so he was not wanting the EU to lend money to Ukraine for the purpose, obviously, of firing things at Russia. So he was in the way of that. He effectively stopped Sweden and Finland joining NATO, which obviously puts Finland, a NATO member, on the border of Russia, which, if you listen to Putin, is the last thing he wants. So it means the EU can go ahead more aggressively with their plan to defend Ukraine against Russia. It's just a political framework. What can they do? They need to be a state to be able to fight Russia properly, which seems to be their whole intent. But this is just one thing that removes a hurdle from them.
Yeah,
so
exactly.
From their
right.
economy at the moment, it means nothing, pretty much.
No, but from a geopolitical perspective, it obviously means something.
Yeah,
good.
Exactly.
Would you? So, looking at release, was there anything else you wanted to talk through, or happy to now go through the charts of the last week or so?
Yeah, so we can go through the charts. I think it's interesting that there's not much to talk about apart from the stock markets, but we'll see when we go through them. So I'll go and share my screen now.
Yep.
You let me know when you can see it. Here we go.
Yep.
So starting left from right with crypto, we'll see that Bitcoin is still in the buy zone, has kind of broken out, but now done nothing. So a lot of people saying that it's the new cycle has started and all this stuff, but really it hasn't. We're just going sideways. Because the Strait of Hormuz is closed again for this hour or whatever, who knows what's going to happen with oil, but we are consolidating between, in Brent terms, 105 and sort of, well, that spiked down to 87, but really, where's that? 92 or something like that. So we are significantly higher than we were before the crisis.
Sure.
And we're now consolidating there, waiting for something to happen. I don't think anyone would speculate on what's going to happen exactly, but we know that if it gets back to the top of 113 or 114 or something like that, that's a really big level. Traditionally, this isn't a high oil price. The world is awash with oil. But it's in the wrong place at the wrong time.
Absolutely.
So this is just, jerking around with whoever's talking at the time. Trump did, I think it was 70 tweets in an hour or something yesterday. So I would say that things are beginning to come unhinged. And maybe that reflects in Hank Paulson suddenly appearing with an urge to everyone to get a plan together. Gold, as you see, is really just waiting to break out or trying to break out, may go down again, but really it's a bit stuck. Same with silver. Oops, wrong button. Here we go. And, it's kind of okay, but nothing happening.
So what are those two commodities sort of looking for to break out of that? Is that, again, the end of the war, or is it something else?
Well, I think really it's price. So, in silver terms, we've been up to 120 odd and we've been down to 80 odd in a week. Lots of people out there own some very expensive silver. And there's only really a catalyst to go higher once we break above 120 again. or go down. So we're really in a consolidation, which looks crazy, but it's just a very big range. And I would suggest that going forward, all of this volatility is going to get a lot more, a lot higher, if we have some sort of plan to rescue the US debt.
Yep.
The dollar, much more interesting in that we have broken lower, and okay, we went up again yesterday on the Straits closing again. A consolidated close below this line here at say 90, let's say 100, which is all of this sort of resistance, but a break below 96 is going to see the dollar in new territory.
Yep.
Rates are backed up. 10-year yield has gone back up. This is a classic bull flag, and we've had a large move up from 390 to 450, let's say, and now we're consolidating around 430. And if we can break this channel and go back up, I think that is probably the course of least resistance, and pretty much backed up by what Mr. Paulson is saying, that if this stuff keeps going up, there needs to be a plan with it.
Yeah, absolutely.
All of which is dull as dishwater until you look at the stock markets. Look at that. What an insane rally. This is the NASDAQ. We were led by the S&P, though, which broke to new highs first and is even more. I mean, what's that, 14 days or something, just consistently going up. You're going to ask me what that means. I think it means that we're in a zone or a time where something's got to happen with the US dollar and rates, because we can't kick the can down the road. We came in, Trump said rates are going to go lower. Everything's going to be good. The interest on the debt's going to go lower. It hasn't happened. So something has to happen. The only thing that is going to happen, like Mr. Paulson tells us, is they keep buying the debt, quantitative easing, maybe adding liquidity to the system, whatever it is, debasing the currency, which means assets will be more valuable numerically because the purchasing power of the currency will collapse. That's what I think it's telling, or that's what it's telling me, should I say more exactly. But it's kind of crazy, that rally, when nothing else is happening anywhere else.
Absolutely crazy. Absolutely, when you put it in that sort of perspective. All very interesting information again, Ian. And what's to come out this week in terms of announcements?
Not too much of importance, really. US retail sales, we've seen consumer confidence plummet, which is hardly surprising. And UK CPI. So nothing that's really moving markets, anything like the Straits of Hormuz.
No. Well, and I suppose the outcomes from last week, there wasn't much out of that really changed the dial either.
Well, it changes every minute. That's the problem. And there's a point at which markets give up looking at that because they got better things to do. And maybe that's what the stock market is telling us. All of that is, we priced it in, we priced that risk in. Let's go and do what we need to do, whatever that is.
Yep. All very sage words. Anything more for this week before we wrap up?
No, that's it. Thanks.
Excellent. Well, thanks again. Always a pleasure to get your insights into what's happening in the geopolitical and the markets as well. So that's another wrap of this week's Limit Up podcast. This and previous podcasts can be located on the Siberia Capital website. Alternatively, you can subscribe by accessing the link at www.siberia.capital/contact. Thank you, everyone, for listening in. Thanks, Ian.
Thank you, Don. See you next week.
Yep. See you then.